Tuesday's market review, Tuesday 13th of January 2026. Getting to the daily chart ahead of the open, I can see the daily candle getting rejected at daily bullish order block. So the current daily candle is finding support at this high of this down close candle, anticipating higher prices intraday to support our bullish narrative. I want to see price stay above this new week opening gap, and as well on daily basis I want to see it attacking buy side liquidity pools and higher objectives around current new week opening gap using it as support. However, we are opening in a premium, meaning opening price will be somewhere here. Previous high has already been taken. This is the open as it stands. By opening bell, we have taken the previous high. Liquidity has been swept on the buy side, and I'm looking to see how we trade across this array. The separation between these two candles, low of this up close, the open of this up close candle and the open of this down close candle, this separation is a volume imbalance. So this is a daily volume balance high is low and consequent encroachment. I'll be looking to see how we trade across that level. Seeing price close above it will get me tipped off for a rally to this bullish objective. The rejection of that level, lower prices intraday. On the 4-hour time frame, I can see confirmation for longs. I can see the bullish narrative being supported because this is a buy side imbalance and efficiency. We saw a pass up, then we saw a single pass down with a sell side imbalance buy side efficiency. Price has traded above this balanced price range, and we see it finding support at the constant encroachment. All the bodies of the candle staying above, that supports our narrative for higher prices to our draw liquidity, being buy side liquidity up here. Dropping down to the 15-minute chart, this screenshot was taken at 9:51 New York time. So this is within the macro. We are currently trading inside the 9:50 to 10:10 macro. Looking at regular trading hours, we have opened, massively rallied to the buy side, swept. This is supposed to say New York PM highs, not New York PM lows. But we have swept New York PM highs, re-engaged this buy side liquidity pool again, rejected, and now we are seeing this down close candle trading lower. These two candles are today's candles from after the open. They are seen here. This is 9:30 and 9:45. So price has taken New York PM lows, but launch lows are still on the table, and we are seeing bearish displacement lower on this 9:45 candle. Moving to regular trading hours on the right, Asian lows, London lows are available. There's actually a buy side imbalance, sell side efficiency here from Monday's trading. So in discount, price is currently at 25,951 even. Mid opening price is way down here around 888.50. So in a premium, I'm looking to short, and that's further compounded by a rejection of this daily array. The daily volume balance at its high, cost encroachment is low, no candle closes within that range. 1 hour and 15-minute time frames see rejection on with wicks moving lower. This builds bearish sentiment and a premium market in my mind, and I'm looking for lower prices intraday. So I'm electing for shorts in premium. I'm targeting equilibrium on the day, which is midnight opening price. Alright, let's get into the setup for the session. Eventually I see price trade down. These two down close candles before the up move that took liquidity and drove into the high of this daily volume balance before rejecting lower. These two up close candles form a bearish breaker. I'm aligning it, that's the bearish breaker. Price trades down, closes below the bearish breaker and retraces up into its constant encroachment. That's why I'm getting short. My protection as a stop loss is above its high, and this is how the trade played out. Alright, so this is my short during the 9:50 to 10:10 macro. You can see price, I got short at the constant encroachment of that bearish breaker. price was actually came very close to my stop. Why is it going up there is because of the first presented fair value gap. It just nicked the low. If you can identify first presented fair value gap on this chart, you see that price just hit the low. On the review chart, you see first presented fair value gap aligned there clearly. It does not go below, it does not go above, and it does not invalidate the trade, it does not hit the breakers high. So I'm looking for speed below these lows. I'm short 4 contracts. There's no chance of pyramid here because looking at the implied range, we're already at 50%, and you can see that clearly. I have my 4 contracts on there. I did not see the sell side imbalance price indication on the 15-minute time frame early enough. So at this point in time, I'm not aware that it's there. Look at that massive displacement lower towards the 830 opening price. I take 2 contracts off as a partial, and I'm trailing my stops down to the high of the old new week opening gap. I should not see price straight up there if it's a low resistance run lower. So I'm expecting to see this fair value gap same price even lower to my 10 minutes at midnight opening price. And I get stopped out prematurely without hitting TP, but that's why the stop is there. Now in review, the white shaded portion from here to here is delineating the opening range, and this gray shaded portion from here to here is delineating silver bullet hour. So at the open, we saw a rally higher. That is seen here as well. Price rallied, then declined. So this rally higher, I'm just fact checking myself. Alright, this rally higher rejects daily volume balance high. We saw 15-minute and 1 hour candles leaving wicks here. We trade below the bullish breaker, get into it. This is the low of a bullish breaker. We get our entry at consequent encroachment, and then we traded down, taking terminus on that position at 830 opening price because we saw a deep retracement. So partials were taken here, the rest were stopped at around here. As you can see, we saw this massive move lower. This move was moving down into this 15-minute buy side imbalance sell and efficiency. This is from Monday's displacement higher, where we just saw a boom. It was a massive rally at 930 opening. We left an imbalance on the 1-minute chart. That sell side imbalance has been traded to here. When it traded to that sell side imbalance, it coincidentally also traded to the daily bullish order block. If you remember the down close candle on the daily chart, price traded down into it. At the same time, trading into this Monday's Reaper, the first presented fair value gap at 930. On the 1-minute chart from Monday, we trade into it here. At the same time, we're trading into the consequent encroachment of this new week opening gap. So a lot of bullish factors here, where we're expecting support on the higher time frame. This is at the 10:30 hour within the silver bullet. So price rallies higher through that swing lower, and we see a market structure shift happen within the macro. The 9 or at the 10:50 to 11:10 macro, she's a rally higher. Market structure shift after taking sell side liquidity. Sell side liquidity has been taken at pre-market lows. It has been taken at London lows, which are here. It's a London lows. It has been taken at Asian lows, right here. This line is delineating Asian lows. So we have taken sell side liquidity. We have swept this short-term low. Massive liquidity sweeps at the key level with the Reaper and the consequent equation of new week opening gap during the macro market structure shift. Model 2022, I expect a retracement to fair value gap or breaker. Buy side balance and efficiency forms here, and we see that entry given here, consolidative accumulating, and just before 11:30, bam, displacement lower, referencing the daily bullish order block. From here we see a massive rejection to the upside. and price pushes up till consequent encroachment of daily volume balance. That's all for this review. If you found value in this, hit the subscribe button, share this to somebody who's supposed to lock in, and let's get this.